Do you have the guts to sell gold? Well, I'm not sure about you, but I do. I do have the guts to sell gold. And here is why. Today is 15th of August 2019, and I know that for a very long time I did not upload any videos to my channel, but I think at least this month and at this particular juncture, it's a good time to have an update. Especially, I think a good opportunity is building in gold from my perspective, and I would like to share my opinion and put up this educational video. Maybe others can also benefit from it. So it might be a little difficult to have this mindset to become bearish on gold, but I personally believe that right now there's a good setup to start selling gold, and here is why. So over here you can see the monthly chart for gold. This is the monthly chart for spot gold, and as you can see, on 15th of August 2019, the price of gold is around $1,517, which is new highs for the year, and it seems it's still going higher with a very good pace. And because of that, many people have become bullish on gold. However, I believe this might be a bullish trap, and the opportunity is building to become bearish. First of all, if you look at this monthly chart, specifically this area. First of all, you can see from the highs back in 2011, around here, gold experienced a downward movement. Okay, so let's first focus on this downward movement. So let me first delete. Okay, so now we want to focus on this. This can easily be labeled as a 5-wave impulsive movement to the downside according to Elliott waves. So this can be labeled wave number 1, and then we had a type of zigzag pattern, or maybe we can call it a flat pattern to be more precise. So we had on wave number 1 to the downside, a flat to the upside, and this is the peak of wave number 2. Then a massive move to the downside, which we can label as wave number 3, a correction as wave number 4, and finally wave number 5. So back at the beginning of maybe 2016, we had this bottom in gold, and since then gold has experienced a correction to the upside. And this correction, if you look closely, has a very typical pattern of a zigzag, A, B, C. So once more, this was the peak in 2011, this was the new bottom. Since then, we're going up, and we can call this a B, and a C correction. So A goes over here, this is wave B, and this is wave C. And what happens after a correction is an impulsive wave to the downside. So with this very simple counting, according to Elliott waves, we can expect that gold will smash down relatively with a fast pace. And the target is to at least break this bottom over here. So the bottom around maybe $1,050, this is the target area I'm looking for to be broken. When this is broken, how further down can we go? I'm not sure, but it's possible to have it maybe around $700 or $600. So if this low breaks, it's possible for gold to dive into the $700, $800 area. About the targets that I'm looking for, I will explain further on, but let's focus back on the Elliott waves. So 1, 2, 3, 4, 5 as an impulsive wave, A, B, C as a zigzag pattern, and then coming down. So now that we know this is a A, this is a B, and this is a C, is this A, B, C actually a wave number 2 or no? This whole movement was wave number A, and this is wave number B, and this is wave number C. Well, at this point it doesn't make a difference. However you want to count it, it seems the next move in gold is to the downside. So this is the most important reason that I have to become bearish on gold. It's a very typical setup according to Elliott waves to have a bearish movement starting anytime soon. 5 waves to the downside, 3 waves to the upside, and possibly another 5 waves to the downside. So this is one of them. Let's move on to the next slide. The other one is over here. You can look at the Fibonacci. So these blue lines are the Fibonacci level, and you can see gold has entered the area between 50% and 61% of the Fibonacci, and this area is an excellent area for gold to come down. If this correction as A, B, and C is part of a 2 wave, you can expect gold to come down from around 61.8%. But if this A, B, C is a part of a larger B wave, then we should expect gold to come down anytime soon rather than later, so around the 50% area. So in order to emphasize, so you see this 5 waves to the downside, this can be labeled as wave number 1 or wave number A of a correction. If you label it as wave number 1, this ABC will be labeled as wave number 2, and it's most likely to stop at the 61.8% of a Fibonacci. If you label this movement as wave number A, this ABC will most likely end on the 50% Fibonacci level and be labeled as B. However, no matter how you count it, most likely between this 50 to 61.8%, this area is the area that gold can have a turnaround and start the downward movement. So reason number 1, Elliott waves. Reason number 2, the Fibonacci area is a good area of resistance for gold. And reason number 3, over here, you can look at the stochastic indicator. So stochastic indicator shows us when market is saturated on either side. If it's saturated on the bullish side, if it's saturated on the bearish side. And in the monthly chart over here, you can see that the stochastic has passed the 80% level. And this means gold currently is in the overbought area. Does it mean that this will turn downside right now? No, it can be in the overbought area for a while without anything happening. However, when you put it in context with the other possible findings, it's more likely for gold to start coming down and beginning the bearish movement. So this is the other reason that I prefer to become bearish on gold. So reason number 1, Elliott waves. Reason number 2, the Fibonacci. And reason number 3, the stochastic indicators. These are major reasons to become bearish gold. From a fundamental perspective, it's very hard to find a reason to sell gold, especially in this environment with all the trade wars going on, all the risks and global risks around the world. It's very tough to have a mindset to sell gold. However, if you put the fundamentals away and focus on the technicals, which I believe is the only thing that the trader should focus on, then you will see good signs to become bearish on gold. But if you sell right now, what should be your target? When should you come out? Well, as I mentioned before, if you want to take high risk, you can wait until we reach the $1,000 level. Most likely, $1,000 level will be broken. And if this level is broken, it has the potential to even go to $800. So if you start to sell from this point around 1,500, possible take profits can be the $1,000 mark and the $800 mark. But this might be very risky for many of us. So if you want to be safer, it's possible to consider this moving average. So I think this is the 100 monthly moving average for gold. And it sits around maybe $1,350. So this is the very minimal, the very least target for gold. So if you sell right now, which is the price of gold is around $1,500 and say $20, the very least minimal target can be $1,350, which is almost $200 drop in gold, which by itself is significant. So if I was going to sell if I was going to sell gold, which I am going to, my very first take profit target will be $1,350. And some of my trades I will get out of them. For example, if I have 10 trades, when I reach 1,350, I will get out of 5 of them or 6 of them, and will leave the rest 4 or 5 trades for the lower target of $1,000 or maybe $800. It's possible to sell gold through Forex brokers. It's also possible to sell gold through stock markets. So if you look at some stocks or ETFs, there are some ETFs called daily bear gold or bullion, or it's also called bullion gold. So you can look in the stock market. There are some reverse ETFs that if you buy them, it means that you're selling gold actually. So I prefer through Forex because I'm more used to it and we have higher leverage. But even through the ETFs and stocks that are bearish gold, there are types that are 2 times or 3 times bearish, which can also be a good opportunity. Anyway, I personally believe, according to the reasons, it's a good idea to become bearish on gold, and this is just my opinion, and I'm sharing my opinion in an educational way to see how we can use technical analysis to possibly predict possible future movements in any financial instrument, including gold. So I hope that's mostly it for this video, and I hope you enjoyed this video. And it was a long time since my last video. However, I think this is a special occasion that it's worth mentioning to become bearish on gold. There are multiple other reasons, but it's not in the time frame of this video to talk about. The 3 most important ones were the ones that I just mentioned. I will not talk about the rest at this time, but overall I believe it's a very good opportunity to become bearish on gold and start selling from current levels. One last point before I finish this video: remember, all of this analysis was done on the monthly chart. So when you do analysis on a long-term monthly chart, we usually don't expect the price movement to happen immediately. So if I'm talking about selling gold, it doesn't mean it will happen right now. It might, but most likely it might take maybe 3-4 weeks to 3-4 months to begin the move, to see the primary move, because it's a monthly time frame. It's not like on a 1-hour chart, it's not like a daily chart, it's not even a weekly chart, it's a monthly chart. So expect some up and downs in gold, and probably some more new highs till 1550 or 1560, and then you might see the sell price. So that's mostly it. So some patience might be needed if you become bearish on gold, but I believe it will have a good return, at least maybe 50 to 100% of the money invested. Okay, so that's all for today. Thank you for watching my video, and see you later.